Hello, and welcome to another episode of Payroll Around the World. I'm your host, Louisa Rolandhagen. Payroll Around the World is your all-inclusive guide to understanding how payroll operates across different countries. Each episode spotlights a specific country and features interviews with ADP experts on the ground, as well as locals who share their perspectives on work and pay in their homeland. After all, payroll can't truly be global if it isn't local as well. Today, we're heading to Switzerland. Most listeners will immediately associate the European country with chocolate, extraordinarily beautiful mountains, banks, and precise clockworks. But behind Switzerland's picturesque alpine landscape lies a patchwork of regulations and compliance issues that can catch multinational employers off guard. While Switzerland sits at the heart of Europe, it's crucially not part of the European Union. That independence strongly shapes its employment laws, social security system, and payroll rules.
We are also part of Europe physically, but not integrated on the European community.
Switzerland is split up into 26 cantons, basically states or provinces, and has 4 official languages: German, French, Italian, and Romansh. This means that employment conditions, pay slips, and HR documentation often vary by region.
Each of the 26 cantons has a degree of autonomy, leading to variation in local labor laws and regulations, and also business practices. So, for example, each canton has its own tax rates and tax regulations. So the calculation is not the same for all the cantons. The deductions are different.
As if that weren't complicated enough, employers also need to contend with the large number of cross-border workers that move back and forth between Switzerland and its neighboring countries, particularly France and Italy. However, it's not just international citizens coming to work in Switzerland every day. Switzerland's most populous cities, including Zurich and Geneva, have famously high costs of living. As such, many Swiss citizens have actually made the move across the border to more wallet-friendly pastures while continuing to work in Switzerland.
I'm an artist and I need a studio in my house. In Geneva, it would have been impossible to find such a house to rent or buy with my salary. That's why I chose to change countries.
That was Banu, a Swiss citizen who moved to France several years ago while continuing to commute to Geneva for work. We'll hear more of her story in a little bit. And those other 2 voices you just heard? That was Dimitri and Marilyn, our ADP experts for this episode. They're going to walk us through the ins and outs of payroll in Switzerland today, and I'm thrilled to welcome them to today's episode. Hello, Dimitri and Marilyn. Would you like to introduce yourselves?
I'm Dimitri Guilbault. I'm the director of ADP Switzerland, in ADP for 24 years. And ADP has been in Switzerland since 1974. That's over 50 years of experience.
My name is Marilyn Duret. I'm Business Development Manager at ADP Switzerland and joined ADP in 1998.
Thank you for joining us today. I'd like to kick things off by talking about Switzerland's appeal as a business location.
Switzerland has a highly developed and diverse economy with very strong sectors such as the financial services, of course, pharmaceuticals with global leaders, and also high quality manufacturing sector, especially of the machinery and precision instruments. So the economy is really reliant on high value goods export with key trading partners, including, of course, the EU.
To understand the Swiss economy, you must understand the country first, because Switzerland is a country with 26 cantons, and each canton is like an autonomous part of the Switzerland. So there's a management with the federal, but all the cantons can decide from all the rulings they want. There's also 4 national languages: German, French, Italian, and Romansh. A lot of English too. And so it adds some complexity in Switzerland because you have a German part, an Italian part, and a French part. So for the economy, we can say that Zurich is the economic capital of Switzerland, even if the capital is Bern.
We have a strong labor market with low unemployment rates and highly skilled and multilingual workforce, like Dimitri explained, because we need to work in various languages. And also we have a very strong education system.
We are also part of Europe physically, but not integrated on the European community. So we are really independent from that. We have a different currency. We have the Swiss franc and not euro.
Of course, that's a really important point that multinationals shouldn't forget. But even though Switzerland isn't part of the EU, there is a lot of movement across the borders with its neighbors, right?
In Switzerland, you have a lot of cross-border coming from Germany, Italy, and France. It represents, just for Geneva, for example, it's 140,000 people crossing the border every day. So it's a huge, and the most of these cross-border are French. After you have Italian, and the last is German.
You close the border, if we can't come to work every day, of course, there will be an issue with the economy, especially in Geneva.
These cross-border workers seem to be a significant part of Switzerland's labor market. Switzerland isn't part of the European Union, so it doesn't follow the same regulatory framework, but it is part of the Schengen area, which makes it much easier for some people to move across borders. So with all that in mind, how are these kinds of work arrangements actually handled by payroll?
We need to deal with bilateral agreements between the countries to avoid that a cross-border will be taxed twice in his country and also in Switzerland, and also social security. So it's quite complex to manage those profiles in the payroll because you have very various situations and we need to comply with all the Swiss rulings and also the rulings from the home country. So this makes payroll complex in Switzerland.
I can imagine. What other aspects of Swiss payroll add complexity?
In Switzerland, the complexity is more with the declaratives and all these cantons applying different rulings, and the fact that you have several languages too. This is very complex for people to manage a company in Switzerland. And really the payroll itself is not very difficult. But all the declarative linked to this is more complex. Also, in Switzerland, we have a global approach. So that means there's a lot of HQ from company.
We have various social and tax status, and we must handle the international tax treaties and the social agreements in the payroll. Yes, with expatriate shadow payroll, etc., where our clients, they also need to have tax advisors to help them because you need really to determine the right status to be applied for each person in order to comply with all the legal rulings. And also the language is more complex compared to France because in France, you just process the payroll in French, where here we have in the company, you might have an entity in Zurich with German speakers, another one in Geneva with French speakers, etc. So you need to produce, for example, all the documents, the pay slips, the salary certificate in various languages. You need also to be able to discuss with the authorities in various languages because the tax authorities in Zurich, you will speak with them in German, where in Geneva, it will be again in French or sometimes in Italian, etc. So the language makes it more difficult to do the payroll.
So navigating different languages across cantons is definitely something that multinationals may need to contend with. What else do employers need to know about Switzerland's cantons?
Each of the 26 cantons has a degree of autonomy, leading to variation in local labor laws and regulations, and also business practices. So, for example, each canton has its own tax rates and tax regulations. So the calculation is not the same for all the cantons. The deductions are different. And we might have some variations also in the social security contributions across the canton. So we must be very flexible about the regional differences. So this is what makes it difficult because we have different layers because you need to be compliant with some federal rulings. For example, the basic first pillar for the social security is federal. But then you might have some differences for other social deductions based on the canton, the social, again, the tax. The family allowances, for example, are different. So you need to be very careful and to know exactly where you should tax your employee. There is a kind of competition between the canton just to attract, let's say, the big fortunes and also the companies. So they need to have attractive tax rates. And you can have also some headquarters where you will find the top management because the tax is lower for the company and for the employees themselves.
So different cantons will compete to attract certain types of business?
I had some experience in the past where some companies willing to create a new entity in Switzerland, they were not familiar with Switzerland. And the first question that they asked me, where should we live to have the lower tax rate? And they asked us to make some simulations just to be sure that they would live in the right canton to minimize their tax.
I see. And how common is it for people to work in one canton and live in another?
There's a lot of people doing that because, for example, we ADP are in Geneva, and we have some people from Vaud canton or from France, cross-border, working from a canton to another one. It's very common. And the tax is with this. If you are Swiss, you're going to pay the tax where you live. If you are cross-border, you're going to pay the tax where you work. So this is a big difference between the canton to canton or cross-border. For the tax, it's really this big difference. And so if you live in Canton Vaud, you're going to pay the tax in Canton Vaud, even if you work in Geneva.
If you compare, for example, to France, where, for example, you have a self-service portal for the employee, they can change their address. There is no impact for the payroll. But in Switzerland, you need to be very careful because if the employee can change the address in the system, then there will be an impact on the tax because you need to be very careful on the working and the living canton because depending on the cases, the tax rate and the rulings will be different.
I want to go back to the issue of cross-border employees again. From what I understand, it's not only foreign citizens who cross the border from neighboring countries to work in Switzerland, correct?
Cross borders are not only non-Swiss citizens. We have a lot of Swiss citizens. Due to the cost of living in Switzerland, they just live in France. And they also have a specific status then as a Swiss citizen living outside. And also, your tax rulings will also depend on your partner and where your partner is working. If your partner is working in the same canton or another canton, because you can have, for example, a Swiss citizen living in France, married with a French partner, and one is working in Geneva and the second in Lausanne in the canton of Vaud. So you have various situations because, of course, it's cheaper. You can buy a flat or a house in France easily. But in Switzerland, it's very, very expensive and the cost of living is very high compared to France. Also in Geneva, we don't have a lot of place now to build new houses, etc. The geographical area, it's limited.
That point is really significant. In this podcast, we don't just speak to local experts. We also talk to local people on the ground and find out what their experience is like from an employee perspective. Therefore, I'd like to introduce Banu, who you just heard a little preview from earlier in the episode. Banu is a Turkish-born Swiss citizen who works as a doctor in Geneva. 4 years ago, she made the move across the border to France.
I'm of Turkish origin, and I immigrated to Switzerland 23 years ago. I work as a doctor, and I'm also an artist. My professional activity has always continued in Geneva. 4 years ago, I moved to France. I've been a cross-border worker for 4 years. I became Swiss 10 years ago, and thanks to this, I have the right to live in France. It opened doors for me.
Despite having moved to France, she's still close enough to Geneva to enjoy all the city has to offer.
I'm currently so close, about 400 meters to the Swiss border and the village of Hermance. I still have very good access to Geneva life, and I use Geneva's public transport.
Before she moved to France, Banu lived in Switzerland, in the municipality of Onyx. But when it became clear that she'd be getting more mileage for her money on the other side of the border, she made the decision to move.
I bought a house in Onyx. I lived there for 10 years. After my divorce, I was forced to sell the house. I didn't have opportunities to find something similar in Geneva, so I chose to move to the French side to get the same quality of life and the same type of house. I'm an artist and I need a studio in my house. In Geneva, it would have been impossible to find such a house to rent or buy with my salary. That's why I chose to change countries.
Banu says she's happy with the move.
It made my life easier because I'm very close to my job and I don't get stuck in traffic jams in the city. I'm happy to be here. My quality of life has also improved.
However, she did realize that dealing with French bureaucracy was not exactly easy to navigate. Her residency status means she needs to file a French tax return.
I had huge difficulties with paperwork, with the administrative work on the French side. I can say that the French system is so difficult.
But because she's employed by a Swiss hospital in Geneva and is a Swiss citizen, her income is taxed in Switzerland and then reconciled in France.
Thanks to my status, there is a withholding tax, so I didn't experience any major problems, but I have no idea how it works for someone who is self-employed and how they have to file their taxes, whether they have to do it both on the Swiss and French side. There are some things I pay for a little more, but when I calculated overall, I am at an advantage on the French side. I took into account the rent, electricity bills, heating, and many other things, and I found that I can live here with my salary, but I have no possibility of living with the same conditions in Switzerland. It wouldn't have been possible to have the same quality of life with my salary.
Banu told us that she knows many other Swiss citizens who have chosen a similar arrangement.
I know a lot of people who do that. For example, my neighbor is the same. Around us, in our neighborhood, generally speaking, everyone is in the same situation. My neighbors on both sides are like me. They're doctors and they work in Geneva.
One thing that stays in Switzerland: Social Security.
I've kept my Swiss insurance since I got here. I live in France, but I use the Swiss health system. It's more secure, more accessible. On the French side, it's not that easy finding a doctor.
I was curious to learn more about how this type of working arrangements affect payroll, so I went back to Marilyn and Dimitri. We just heard from Banu, who moves between France and Switzerland. What do employers need to know about these kinds of employment situations, and how does it affect payroll?
There is a bilateral agreement between France and Switzerland, so you might be taxed in Switzerland as it's tax status. It's calculated in the payroll. Then in France, you do a declaration, but then they just deduct from your tax what you already paid in Switzerland. And Switzerland pay a certain amount of this tax, we say withdraw or send back some money to France. It's bilateral agreements, but you are not taxed twice.
Do these kinds of bilateral agreements exist with other neighboring countries?
Yes, so with Germany, with Italy, so it's mainly bilateral agreements between neighboring countries. As Dimitri mentioned, Switzerland is not part of EU. And this is also for the Home Office, for example, we have various agreements. So the rulings from Germany are not the same as for France when you work in Switzerland.
That was just going to be my next question. How do remote working arrangements play a role here?
There's some rulings more for cross-border, because when you're cross-border for France, for example, you are limited to do 40% of the time at home office and not more, included all the trip you can do abroad the country. So you have 10 days abroad the country included in this 40% of home office. So if you go over this, you have to pay tax in France.
So you mean business trips are part of this 40%?
Each time you are abroad, meaning not working in Switzerland, it's time abroad. So you have 10 days, limited at 10 days. After these 10 days, you pay also some tax. And for example, for German, it's different. For France, it's 40%. For German, it's 49.9%.
Wow, that's very specific. I'd love to know how they measure that. I want to change course a bit and go back to something you said earlier, Marine. You mentioned something about the first pillar of the Swiss social security system when we were talking about social security on a federal level. As far as I understand, Switzerland's pension and social security system is built on three complementary pillars designed to combine state security, employer contributions, and individual choice. Can you elaborate on that?
So the first pillar in France we say AVS or AHV in German. This is the minimum pension that a retiree will get, but it's not enough for living in Switzerland. It's mandatory contributions for employee and employer just to pay the pensions. And then there is a second layer, a second pillar. So this is the occupational pension plan. It's mandatory, and both employee and employer pay this contribution to do some savings for the retirement. So this is included in the payroll. First pillar and second pillar, we have some payroll rulings to calculate the contribution. So it's the same for all the companies in Switzerland, where for the second pillar, the company will choose a pension fund. And then as an employee, of course, it's mandatory to be involved in this pension plan. And each time you change employer, you will change to the pension fund. And of course, there are various ways to calculate this in the payroll. And it's also something that might be complex if we want to calculate automatically in the payroll system. And the third pillar, it's a private savings. It's completely outside payroll. It's also a kind of pension plan, but you just take it in a bank or an insurance company.
I see. So for employers, it's really the first and the second pillar that they'll need to contribute to. What else do employers need to know about running payroll in Switzerland? For example, what's a typical payroll run like?
In Switzerland, most of the company pay their employee the 25th of the month. So they start retro from this date, and we calculate the first, what we call cutoff date. It's the first step where you upload all the data for the month. Generally, it's around the 10th of the month. So you upload all your data at this cutoff date. And after you do the first run of payroll, so the first calculation. After that, you check your payroll, and if needed, you do a second run to arrive to the payment date and to provide a payment file. In Switzerland, we have a XML norm. We have a norm for this bank file, and you provide all the reports and the GL file for the accounting. You have finalized your payroll, and just after, you do all the declaratives. So there's a Swiss norm called SwissDec 5, where you send by teletransmission all the declarative for the company. And so it's something where it's concentrated all the institutions who are part of this norm, and after redistribute to all the institution the contribution for these SwissDec declaratives. And after the declarative, it's the end of the payroll cycle.
Got it. So employers submit all social security and tax declarations through SwissDec, which is a central platform that distributes the data to every required institution, officially closing the payroll cycle.
Most of the companies, they just process all the population at the same time, so one cycle per month. But we have some clients that, for example, monthly paid and hourly paid employees, and they just process separately. So we might have more than one cycle per month just to segregate the population that will have various payment dates. So in December, some companies, they paid the 13th salary in advance before the normal date. We have also this, especially for the banks, they are paying bonuses outside the normal payroll processing. So they have an additional and off cycle to pay either the bonus and or the 13th salary at a different date.
Is it common in Switzerland to pay a 13th month?
It used to be, let's say, but it's less and less common, and more companies now are paying on 12 months. Of course, it's easier to manage.
So as I understand it, timesheets are a particularly important thing in Switzerland. Can you explain that a bit more?
Yes, for sure. In Switzerland, you have a norm managed by SECO.
I'm just interrupting quickly to explain that SECO stands for the State Secretariat for Economic Affairs. It's Switzerland's federal authority for economic and labor market policy. Please continue.
It's an obligation to have a timesheet and to do this every month. There's an exception for the executive who can build a convention where they are not obliged to do the timesheet. But this timesheet is mandatory for all the other employees. And at the end, you have overtime or less time than you made. But when you have overtime, generally the company used to do compensation and not to pay. Some of them want to pay a part and to compensate the rest. But most of the company use compensation. That means free time for the people. And I think the employee like this to compensate their overtime. They like to be paid too, but sometimes it's a mix. But there's an obligation for that in every company.
It's quite an opportunity for companies like ADP because as the companies must comply with these legal rules on working hours, rest periods, overtime, etc., of course, they need to have some time recording system. And the SECO encourages the adoption of digital time recording tools. So time tracking systems are more and more integrated with the payroll system.
We have one TNA platform, means time and attendance platform, and so compliant with the SECO ruling. And the advantage for ADP is that it's an integrated one. It means it's integrated with the payroll. So no need to have some interface between the two platforms. So really, it's a very good platform where the client can comply with all the SwissDec and SECO rulings.
I see. It sounds like ADP Switzerland runs payroll like a perfectly tuned Swiss clock. We're nearing the end of the episode, but before I let you go, I'd like to ask you my favorite question. What do you love most about working in payroll in Switzerland?
For me, it's the diversity. I think we have a really diverse sort of client, languages, different situations, different companies.
I would say this is mainly the international environment with the cultural exposure because, as Dimitri mentioned, we have a lot of people from various countries. So we need, of course, to adapt to all these cultures. So we must have a lot of flexibility too. We need to be able to communicate in various languages with people coming from various cultures.
That's a lovely note to end on. Marilyn and Dimitri, thank you so much for joining us today. It's been a pleasure to learn about Switzerland's cantons and how their individual regulations affect payroll. I also found it really interesting to learn more about the way cross-border workers add new levels of complexity. I hope you got a bit more insight into the intricacies of payroll and the labor landscape in Switzerland today. If this episode has piqued your interest or your company is considering expanding into Switzerland, please visit ch.adp.com to learn more. And don't forget to subscribe to learn more about payroll around the world with each new episode. You've been listening to ADP Payroll Around the World, produced by ADP and StoryThings.